What is going on, guys? I just wanted to make a really fast video for you guys on why it's important to follow the VIX, the fear gauge, money sign VIX. Whenever the VIX gets above 16, that's when we start to see the markets get very volatile. As you can see, today it started off, somewhat normal, around 14, and it's been getting really low recently, but today it just got a real nice spike up to almost 16. And as you can see, it's approaching 16. Let's look at the overall market. Boom, we get the SPY ramping up today to 292, and then it just gets this down, and look at that, just down selling right there. Consolidation, and then big just selling right there, all the way down to 289 from 292. That's why it's important to follow the fear gauge, because it also opens up more opportunities. You got the overall market increasing with volatility. You got the SPY selling off. That's when you'll start to see the inverse ETFs start to pick up momentum. Now you can see TVIX here is an inverse ETF to the SPY. Let me load up my marker here, and you can see it went from 2050 all the way up to 2270 now as we speak. Look at that, just nice wedge right there. And then just starts to explode up and get momentum, pulls back, and just keeps going and going and going. Like I said, that's good range. 2050 all the way up to 2270. When it's slow in small cap land and there's nothing going on and the VIX is approaching or above 16, that opens up more doors of opportunity to play inverse ETFs. And this is just another playbook play to add to the playbook. We got TVIX, that is inverse of the S&P 500. UVXY. Look at that. Same thing as the TVIX. This time from $33 up to $35.69. And we just got all these, everything's just selling off. Even the Qs. Look at that. Just going lower and lower and lower. And the Russell 2000. Look at that. Just big sell-off. Ever since yesterday, when the Feds came out that they weren't doing rate hikes, they came out with it. We had a 6 sell-off at the close. Today, this morning, it was looking good. We were starting to grind back up, and then boom, volatility just picks up and we take off. So back to the VIX real quick. Even VXX is another one. But that's money sign VIX to look it up. You always want to keep track of the fear gauge. And that's why every day when I do the market recap, I'll always say where the VIX is. And you can see it's just approaching just below 19. And we just got a great spike up. And that's when all this volatility comes into the market. So it's going to be interesting to see now how far back the SPY, the Qs, and the Russell 2000 all pull back today with this just huge sell-off right here. And again, like I said earlier, this just opens up doors for more opportunities out there. When it's slow in the overall market and the VIX is really high and we got volatility in the market, that's opportunity to play these inverse ETFs. The NASDAQ has it. The SPY has them. Look into them and just learn about it. As a trader, you should be open to learning all kinds of stuff. But I wanted to make a real quick video for you guys. I will probably redo this video over the weekend to better explain it. But as this is happening right now, I wanted to give you guys an on the field look at it happening right now. Because this has just literally happened. And this is all about adapting to the market, reacting to the market. Quit trying to predict the market. Take it day by day, week by week, and just stop trying to predict and react. And this is a great example today. We just get a great U shape and a real great spike up on the VIX. The fear gauge is up. We're getting volatility. The SPY starts dropping. The inverse ETFs start picking up. Opportunity arises. But all right, guys, that's going to be it for this one. Have that patience, have that discipline, and study, study, study. All right, everyone, be safe. Later.